Portfolio Builder members, today is June 17th. This is our trade alert. We made 68 cents a share from Friday through today, and I've broken down the math for you. Here's the profit we were sitting on, 43,423. Today it jumped up to 44,579. And this does not take into account the money we've still got in value in our put option. So we actually made about 10 cents more, but we're not going to sell the put option. I think there are some potential market disruptions ahead. And the title of today's video is An Immovable Object Meets an Unstoppable Force. And so we're talking about Trump, populism, yellow vest, Hong Kong, people really standing up against globalism. And then we've got China, who is this communist dictatorship. And we're seeing democracy clash into communism, and it's going to clash. So I think these two huge superpowers are going to start to decouple, and that's what today's trade alert is all about. So if we do look at the current trade alert, I'll go down to the pictures. First step is to obviously own 100 shares of the SPY ETF. After that, if you did take Friday's trade, you'll need to buy to close the 289 call option that we wrote. Now, if you have not sold to open this covered call already, you can skip this step. You can go right to the next step. So we got to close the previous trade. And so our underlying asset went up and our covered call remained about flat. So we didn't make any profit from the covered call, but we did have downside protection from it. But we did get the profit from our asset increasing in value. The next step is to sell to open the June 19th, that's this Wednesday, call option for a credit of $1.29. So we're taking in a credit of $1.29. Unless the SPY jumps up by probably about $2, maybe even more, the chances of us getting to keep that entire $1.29 are low. But we should be able to hold on to most of it. If the market goes lower, we'll certainly get to hold most of it. And if the market goes flat, we'll get to keep part of it. So that's kind of the potential profit on that trade. What it does is it provides us some guaranteed income if the market goes flat. If the market goes down, we'll make probably around $50 profit when we look at how much we've lost at the underlying asset. As long as the SPY only goes down by about $1.30, we should walk away with a pretty good profit on that, probably around $50. Now, if the SPY were to skyrocket higher, then we get to keep the full $1.29. And if the market goes below 289 or even further, that's where this trade comes into play. So we're leaving open the put option we already purchased from Friday. If you missed that trade, don't worry about it. We're going to be doing a lot of downside protection because I do think there's some market volatility in the near future. So in our evening update, I'll spend a lot more time educating you as to why I think that there are disruptions in the near future. But today's video in the morning, we're just going to focus on how to put on the trade. And essentially, I'm teaching you how to get a free ticket to bet down, or as close to free as possible. So we buy this asset, the SPY ETF. We sell a covered call to some fellow who thinks it's going to rocket up. And there's good reasons to think it might rocket up this week. We'll talk a little bit about that. But my prediction is that we're going to have a decoupling from China in either 2019 or 2020. And I believe this is going to force a lot of Wall Street to remove funds out of unregulated companies in China. So that's why we want to own this put option on FXI. So this should help protect against downside risks in the stock market in general, and I think provides better protection than just owning a put option on what we're really putting our money against, which is the SPY ETF. So this is FXI, iShares China Large Cap. The main two companies that it owns are Tencent Technologies and Alibaba, but it has a huge basket of companies underneath the hood, all of which have very little accounting responsibilities. In fact, it's against the law in China to actually audit any of their companies, so you have to just take their word for it. Anyways, that's what this big trade war is really about, and to make their books accessible to Wall Street would have to essentially give up their control over the Communist Party, so that's not going to happen. So I think there's a high risk of Wall Street money having to flow out of these ETFs, and this particular ETF is 100% concentrated in such investments. If you go to like emerging markets ETF, at least there's some investments in India and Taiwan and South Korea, so it's less concentrated into this particular group of companies that might get blacklisted by the US government if they're not willing to start kind of playing fair in the world economy, and they're certainly not. So this trade is to buy to open the August 16, 2019 $38 put option for 45 cents. So we're probably going to make around 70 cents to as much as $1.39 on the covered call. And we're giving up a good chunk of that, maybe half, maybe a third, depending on how much we make on the other trade, to get this longer duration, more leveraged put option on FXI to protect against the downside risk of us being in the business of owning the SPY ETF. And so we're using the covered call to give us a tiny amount of downside protection on the exact asset that we're owning, which is a SPY. And if we see that the value of our covered call goes down, which means we can buy it back for less, that's good for us, being the writer of the option contract. Well, if we see the markets going down, we're going to simply buy back our option contract and sell a new one. And so that's how we can continue to protect this position and really minimize any potential risks for owning the SPY. And then take the profits that we do generate and put a little bit of those into shorting a much smaller, more potentially volatile stock index, which I think FXI will prove to have a lot of downside ahead of it if the U.S. trade war does escalate. So I think this hits every big, so-called company in China that has U.S. investments in one shot. So it's a good one. So that's our trade alert. What I think a lot of people will get wrong is predicting when this shock is going to happen. So I think timing-wise, we have 4th of July coming up. When is Trump going to rile the markets next? When's the next tweet? And essentially, I think they'll start off slowly. They're not going to force Wall Street to dump all of its Chinese assets in one swoop. But I think people are going to start figuring out that that's where it could lead to. And if I do pull up the chart, we can see just in 2015, this traded all the way down to 29. And so I've looked around. There are a lot of different emerging market ETF funds that are all ran by these banks. They are totally in cahoots with the Chinese. It represents billions and billions of dollars, probably hundreds of billions of dollars once you go dissect all these different investments, all these different ETFs. So if there was a fear that we can't do business with these folks because, well, first of all, you can't even audit their financials, and we've got American pension funds flowing straight into power these Chinese companies. Well, it could fly really low, really fast if this started to really unravel. So much tinier market cap in the U.S., this ETF, so it'd be a lot easier to swing up and down in a fear compared to the S&P 500, which is probably the most stable product out there because of how much sheer money is involved. Now, Chinese have tons of American assets, so of course they can dump those assets as well, and will, if we really start to decouple. So it's not to think that the SPY is invincible and FXI is not. I just think that this one could crash much further, much faster with the events that are unfolding. And so the potential on that put option is to go up, tenfold as we break beyond the strike price. So every dollar we go beyond the strike price, that return could probably double and double and double. All right, that's the trade alert. Let's get this out. I'll have a lot more content this evening to talk about what's going on. Of course, if I'm wrong, put options make nothing. We're still making a great profit owning the best asset in the world, the SPY. So thanks again, and look for this evening's update. Don't forget we have a customer-only webinar this Wednesday at 1 Eastern, and we have anybody who's just on a free trial. We host a webinar for you folks on Thursdays. So both webinars have quite a crowd and usually run for about 2 hours, even though we only say it's for an hour, mostly just chatting back and forth. So happy to answer any questions you have. If you want to save on your membership, our basic program is going up to $2,000 a year this Friday. So this is your last chance to save $1,100 by calling Dean at 505-322-7515. Over the phone only, we have a $1,100 discount you can lock in for the rest of your life. So you'll pay $897 a year. And also, what's important, when you do upgrade, not only will you get access to the little more advanced webinar class, you're also going to get 30 days free access to our Diamond program and our Whale program. And so there's a couple other big plays that I see available to investors to safely pull some profits out of the market during what I think is going to be a heated up trade war in July and August. So if you want to take advantage of that, you're getting the play in the basic program by pulling the easy money out of the SPY ETF, selling those call options to stock speculators, and then putting a little bit of the profits into that put option, betting that most likely the trade war will intensify and that Wall Street's going to have to start pulling back some of its investments from China, or at least fear that they may have to do that. So that's the big play that we're doing in the basic program. But there's another huge play that's not included in that program that we are trading in our Diamond program on Tuesdays and our Whale program on Thursdays. So again, call Dean. Let's get you taken care of right now. 505-322-7515.